Prologis reported their earnings and we're going to cover them right here, right now. Welcome to Wealthdom. I'm Nova PM. You can find the entire presentation or the detailed presentation that I'm going to read you from now in the link below. Let's just get started with Prologis. Overall, Prologis reported a interesting earnings report and they seemed to be benefiting from strong logistic demands. Overall, they are down for the entire year, so 1 year, 12.29%. In the last 5 years, you would have held Prologis for 5 years. You would have gotten 18%, so definitely under the 90% of the S&P 500. We wouldn't have beaten the market at all. Okay, so let's get started with a couple of key highlights here from Prologis. The earnings beat expectations. Prologis reported a core FFO, funds from operations, per share of $1.3, exceeding the analysts' estimates of $1.25. This is why the stock jumped for Prologis pretty good in the opening of the market. I believe it was 4 or 5%, something like that. Also, strong leasing activity. The company experienced robust leasing activity with high occupation rates across its portfolio. The rent growth remains strong, driven by high demand and limited supply of logistics spaces. Also, the strategic acquisitions and development made a huge impact for the company because Prologis continued to expand its portfolio throughout strategic acquisitions and development projects. Now, the impact of e-commerce growth for the company was that the continued growth of e-commerce fueled demand for logistics spaces. So that's good. Now let's see a couple of key market drivers here for Prologis, which we would just summarize as continued growth in e-commerce and limited supply and logistics spaces. So once again, supply and demand and technology. Three major factors for supply and demand are one factor because you can't have one without the other that influences the pricing power for Prologis, and e-commerce, which is technology. So both play in their hand. Now let's go over the key strengths here, which is of course the diversified portfolio and their focuses on sustainability. Now looking ahead, and let's also talk just a tinge about the high demand for logistics spaces because the demand for modern logistics facilities remains strong and it is driven by e-commerce. Also, limited supplies and rising rents plays into their hands because the available spaces are fewer and fewer. And if you need to store more stuff, then you can raise prices. Okay, now let's go ahead and see what the future holds for Prologis because the ongoing expectations of e-commerce is well to the right and upside is going to grow because if demands don't stop, then that will not stop. And well, the supply chain will always play a big role in this because the trend towards supply chain reshoring and diversification could further increase the demand for domestic logistic facilities. So let's just draw a quick conclusion here for Prologis' latest report because the earnings reflect the company's strong position in the logistic and real estate market. It's also well diversified portfolio and focus on the strong strategic growth initiative positions it for continued success. So Prologis for the win, but again, this is not financial advice. Please consult a financial advisor. It's only for entertaining purposes. But with this being said, thanks so much for watching Wealthdom. I'm Noble PM. Stay safe out there. Catch you next time. Like, subscribe. Bye bye.